In this educational video, I want to take a look at lines, and I'm talking about just the lines you find either on the price or on the RSI. So for example, if we have a line on the RSI, what I want to discuss is how we can use what the stock is doing, the stock's own behavior, to tell us how to look at possible entry or exits out of a stock, especially if you're a short-term trader, talking about for a couple of weeks, for a couple of days, holding a position. So you might find that a stock might be moving above. Let's take a look at the RSI in this example here. Maybe a stock moves above the RSI, back below it, comes, hit this line, moves below, above it, maybe even does something like that, or even something like that, and eventually takes out. What I want to talk about here is the idea of extending your line. So if there's a line, just extend it, keep it on your charts, and see whether it can give you additional information in the future. Now in this particular example, it's very obvious that what we are seeing here is this could have been a sell point on the stock. This here was a sell point on the stock. Also, you see that the next time the stock hits that line here, that was a sell signal. In this particular example, this is what I call a wave cancellation. This area here is equal to that area. So really what the stock was trying to do was go flat, but it has to confuse us, so it goes up, down, and then up, which the balance of that is just a flat line, and then this becomes a sell signal. This was a sell signal here, double top, and eventually we see that the stock would break out. So just keeping the lines on the RSI and sometimes on the price can tell you how to trade a stock. So here is a nice entry because the stock doesn't come below this line again. It stays above the line and moves higher. Typically the price is going to move higher. Now you can find these lines behaving in all sorts of ways. Sometimes the line is just a straight line on the RSI, so something like that. And what you observe is that over time the stock is going to have some very predictable behavior, because every time it moves above or below the line, above the line it's a buy, a sell, especially if it's uniform like this. Here, if it's uniform, then the idea that it moves back below that area is a sell signal, or maybe comes and hits that line. Especially the sharp ones, the sharp reversals tend to be outright reversal signals, or maybe it's a sharp signal, something like this, sharp below the line and back above it. This tends to be a buy signal, so you can use the line. Now another way you can look at this is maybe the line is now trending higher, and every time we go below it and above it, especially if it's uniform, that becomes a buy, or maybe we go above and below it, that becomes a sell. And just keep these lines on the chart. Keep extending your lines on the RSI is the takeaway in this video, and see what you can learn from a stock. So let's take a look here. Let's begin by taking a look at a daily chart for Goldman Sachs, and this is daily chart going back to 2012 January, and for about 2 years of data on the daily. So let's begin here by taking a look at this example. We see the stock made incremental highs here in price, and what we noticed at the time, if we go back and backtest this behavior, is we formed a double top here on a declining technical aspect. So we make lower lows in the technicals as negative divergence, and also you can draw a wedge here. So this was a wedge forming, and eventually once we broke below this level here, that was a sell signal, and that happened to be a nice sell signal there for the stock, because the stock did move from about 165 all the way to about under $85. So that's a big drop. So what you do, and this is very simple, is find out what the stock is telling you, and the stock is telling you that this is a major point, a major sentiment level, and what you do, you just extend that line from that break here, and that presents you with a lot of opportunity to understand what the stock is doing. For this here was a sell signal, which is that high. There was a sell signal because you touched that line and failed to hold above it, which is this high. So very simple understanding. We came very close here, which was this high here, and a small pullback. All right, now that's okay. We tried to capture above the line here and failed, and it's uniform action above the line and back below it, which happens to be this nice top for a very nice swift move lower. All you had to do is just understand that the line, this line here, is where the stock is showing you some behavior, and then here you can see this is very sharp above the line, back below it. That's very uniform. So here this is a top, very obvious top, and you can see the stock went lower. So by extending the line, notice that now we come here, and for the first time here the stock moves above the line, tries to go back below it, but holds on the line there. So this here is an entry point, because now we are getting that it is holding above the line for the first time in more than 11 months. So actually more than a year, somewhere in that range, holding above this line for the first time. So this becomes a buy signal. Also happens to be an area at the 50-day moving average. So lots of information here. Takeaway is right here, we held above this line we have drawn. So we didn't get the sell signal, we got a buy signal this time from this movement here. Now there's another way you can look at this, and it's just if you take the highs here and this close to this high here, through this high and past this high here, draw a straight line. Let me use a different color here so we can understand that, and draw a straight line through all those points there roughly. I can even draw it somewhere there. You see that the breakout, the stock finally moved above the green line here, which happens to be this area again. So lots of information that there was a breakout to new highs above the green line, which connects roughly the highs here, here, through here, because this was uniform above and below it, and also through here. So let me explain something here. In this particular area here, why did I not draw the line here? Well, because the stock did something like this: sharp up and sharp down. In fact, let me draw that a different way. So we're talking about this behavior here on the RSI. Is the stock went sharply up and sharply down, and so the line, this shows that this was actually a trap. So you kind of want to negate this action here, because it's very sharp above and below it. So you can just take the midpoint somewhere around here, because that's the uniform action on the RSI, and it makes sense because eventually if you draw the line, it connects very nicely through that line, also through this level here, because it's uniform, and uniform action tends to be the best thing to do is take the average price somewhere around there. So that's how I would have looked at this, as changing behavior here because the stock was breaking out. Let's move on to the other chart here. Now this is the same chart, but now we are looking at current chart December 2013, and it is going back to daily chart to December 2009. And some of the things I want to talk about is, so we go back and draw our line again here, which we had discussed earlier. There was an entry point there. Now if I extend this line, which gave us this entry point here, all I have to do is extend the line. And this line still becomes interesting because it tells you a lot of buy and sell points. There was a sell point here when we moved back below the line here, which happens to be the high there. There was a sell point once we moved above and below the line here, which was this high here. Sell point here when it could not move above that level, which was this highs. Sell point here, which was this highs here. Sell point here, which was this highs, and a small pullback for a couple of weeks there. Take a look at this movement above and back below the line, so sell point there. But notice recently the stock is holding above this general area, so this could be where the stock could move higher, and you can see it is correct because it has been trending to the upside. Now let me show you the reverse of that. So this line, the green line, was also a buy signal. Let me get the right color. was a buy signal when we moved above that level, which is this general area here. Once we recaptured this level here back above the green line, which happens to be this low, we went back above this level here, the green line, which happens to be this nice entry point there, above the green line here, and stayed above it, which happens to be this entry point here for a nice move. And you can see that subsequent moves here were kind of like uniform above and below it, uniform above and below it. So not the best buy signals, but right now we can see that we've recaptured back above the line, the green line, and the market is trending higher on Goldman Sachs. So the idea here is just keep your lines, don't get rid of your lines. Now take a look at the previous highs. Now this line that I drew on a previous chart was here. I want to extend this line. So this was the previous line we drew and the entry point was there. So now if you use this chart, you'll see that there were lots of sell signals. There was a sell signal. See where that came. We moved below the green line now here, which is this sell point. We held above this green line generally here, which was this lows here in the stock, and we get this subsequent nice move. Okay, we held again on the stock here on that green line, which is this very nice low. Double bottom here, hope you can see that. Double bottom there, and held. And notice this again, we find support by extending the line down the road, that this becomes a nice entry point, which is this level here, and the stock has never looked back. So the idea is just keep your lines on the chart. Don't sell them just because, or don't get rid of your lines just because stock has advanced. Keep the lines, or go back and back test by drawing lines and see which line makes sense. For example, right now I noticed that, by the way, let me talk about this using the highs, this breakout. There was a line here that connected the highs here, 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 and here, and here, draw a straight line. Once the stock breaks out, which is this here, that becomes a good entry point, which is here. We see the same type of behavior, breakout on the RSI here, which was this nice entry point here. So lots of information. Entry point there. We see another breakout somewhere here. So this becomes another entry point here, which is this entry point here. So the chart can tell you a lot of things. Now, I want to extend a line here that you might not be able to see right off the bat, and it is this line here which connects this low here, this low, and this line. I'm just finding a line that makes sense so we can understand what the stock is trying to do at this particular moment. So you'll notice that here we were below the line, so the stock is a sell here, this general area. But once the stock moves above the green line and holds above it here, this is a nice entry point. Also happens to be the stock capturing the 50-day moving average. Take a look at this movement here below the line, uniform action and back below it, right? You see that uniform action below the line and back below. So this here becomes a buy signal with it, which is this general area here. Take a look at this movement here, back below the line here. That becomes a sell signal short term. If you want to sell the stock for a couple of weeks, that's a sell signal. Notice that we went above this line and back below the green line here, which was a sell signal here, which was down for a couple of weeks. And now we seem to be back at that green line. So what this tells me is that I should watch this in case this stock rotates and moves back below the green line. This could be a sell signal for the stock. So that's something I'm watching to see whether that is going to take place. I also can notice here in studying this chart is if you draw a line connecting the tops of the RSI here, this double top here and here, this top here, this recent double top here, this double top here, you see that we broke out to the upside here. So this becomes also, it's a buy and an area to watch. Why? Because even though it's a buy, you have to be aware that there is a line that connects the lows, or a line that makes sense in reversals for the stock. So we watch this, we know it's a buy, but we are careful in case it rolls over below the green line, that could tell us that short term it has made a high and could be pulling back, and maybe the pullback might not be that big, but it could be good for 10, 15, 20% correction to the downside. Now before I leave this chart, I want to show you something else. Take a look at this observation here. There seems to be, once we broke out, and this is just from back testing, you see there was a breakout somewhere here, or we can draw it this way. Why? Because this was a nice entry point here once we moved above this line here, which happens to be this very nice entry point for a good successful move. So what we do is that we extend the line. Just extend the line. It's now drawing in green there, and you'll notice that below the line the stock pulls back, which is this level here. Above the line here the stock moves high, which is here, this general area. We hold above that general area here, which is this lows here, and subsequently back above the green line, and the stock takes off. We come here, very nice action below and back above the green line, so it's short-term entry here. Again, we hold above the green line here, which is this lows here. We stay above the green line here, move higher. The stock also does the same thing. We come here, and you can see that we are playing around this green line. Take a look at this action. This here is same as this action here. Hope that makes sense. In other words, let me draw the line again. Take a look at this uniform action here, above the line and below the line. So basically what that means, this is uniform. What that tells me is that in reality, or from a technical standpoint, what the stock was doing was forming a wave cancellation. In other words, the stock was actually technically flat in this period because these two areas cancel out. And so what that means is that the stock was actually staying above the green line. So this was telling you that this was going to move higher, and yes, it did, because the stock stayed above the green line. Also here, back above the green line here is an entry for a nice move. Back above the green line in what seems like a V-type formation here was nice entry there. Another V-type formation here, back above the green line. Goldman Sachs has been a buy since then. Okay, so let's move on to the next chart here. And this is going to be quick and simple. It's with the VIX. Now if you take a look at the VIX, take a look at every time it spikes. Like for example, it would spike, this spike here. And now what we do is that we see that there was a break. So to find out the break point, somewhere there. And so I've drawn a line here. So after we get this reversal signal here, you find out where the break point happened, and the break point happened to be somewhere around here. Draw a straight line. Notice it tells you when this was a sell signal, and this is in May or March of 2013. So the market is a buy once you get the reversal signal here. Let's take a look at what happened in the market in beginning of March 2013. And so March, this is S&P 500, March 2013 here. Take a look at how the market made a low and moved higher, because the VIX was telling you that the VIX was a sell, the market was a buy. Let's go back to the VIX again. Take a look at extend. This is the line we're extending now. Oops, let me draw that a different way. So this line here, and again we could form the double top here in the VIX on the daily. So the market was a buy, the VIX was a sell here. So in the middle of April, see what the VIX looked like middle of April. It happens to be right here. Notice that was a nice low in the market, testing the 50-day moving average, and the market has never looked back since then. Take a look at the VIX again. And the good thing here is that I've been aware of this level on the VIX, talked about it throughout 2013. Take a look at this here. We stayed above the blue line, but eventually we broke down here. So once we broke down here, which was this highs here, that told me that So I'm talking about this break here, this break here. This is the high. So that tells you the market was a buy late June. So let's take a look at what the S&P 500 was doing in late June. And as you can see, late June, which is here on the market made a low because the VIX was a sell, and the market has never looked back since then. The same scenario, if we go back to the VIX, take a look at when the VIX comes back to this general line. Very simple actually. Next time we can't hold above the line, and this uniform action above the line, back and back below it. So that's a sell signal, which is here, happens to be in September. Let's take a look at what the S&P 500 was doing in September, and you'll notice that in September, I think it was August actually. Let me see that again. Make sure we are doing it right. Yeah, so late August. Take a look at the S&P 500 in late August. This is the RSI, late August there. Market makes a low and subsequently moves higher. So the VIX being a sell, the market becomes a buy. Same reasoning here. Here was a sell in October, which is here. Take a look at this. Sometime over the last week in December, this is a sell, so the market is a buy. And you can see that in October, that was the low in the market there, low in price, market moves higher. Here in December, we see that the VIX has peaked, the market wants to move higher, and as you can see right now, breaking out. So the VIX is telling us the market is going to be going higher for the foreseeable future. Take a look at the chart for the dollar here. And what you see here is very simple. Is if you take this blue line, see whether I can, if you take this blue line here for the dollar as seen by the UUP, now this line was established once we had this high, and through this double top here, you notice that this here was a sell, very obvious, which happens to be this high. In fact, you could have said that the line was already established with these two highs here. So this double top here was a high in the dollar here. Now notice what has happened is we moved above the blue line, stayed above it, and then eventually moved back below it here. So this was a sell signal here for the dollar. Now notice what the dollar is trying to do. It is above the line, but looks like it could roll over and back below the line. So this could be a short-term high in the dollar, which means the dollar could go lower. But we also have to be very careful, because if the dollar does not go below the line and the dollar does something similar to staying above the line and spikes above that line, especially if that comes with a breakout here, if eventually you see a breakout on the dollar somewhere here, which would be this general area, then the price would be a buy. For now, we don't see any buy signal for the dollar because it is very close to rolling over back below the blue line, which has been trouble for the dollar. Now, I want to show you some observation here. Take a look at this line here, which I'm drawing now in blue, and it too gives you very interesting information here. A break was a sell signal there. Take a look. We stalled here twice, which was this high. Then we went to fresh lows. Now we've moved above, or we moved above that line here, which was this nice short-term move. But now we are back below the green line or the blue line here. So this was a sell signal also for the dollar a couple of weeks ago. So we just need, what I'm saying is, keep this line here in orange but now being drawn in blue. Just keep that on your charts, because down the road, if the dollar comes and cannot move above that blue line and stalls, that could be a high for the dollar. Now let's take a look at the price, because there's some interesting observation here. If you take the closing daily lows here on the dollar, on a daily closing low, take this daily closing low, draw a straight line. There was a daily closing low there. Once we got the break point here of this, so once we broke down here, that was a sell signal. But notice what happened. So you extend this break point, extend that line, and what's interesting is we touched that line here in November. It's precisely intraday touched that level, and since then we've seen this market pull back. So the idea here is keep your lines extended. Next time the stock comes, so extend that line. In the future, if this market ever comes and touches that level and can't move above that level, then all you have to do is recognize that that could be a top. In other words, if we come and hit that level and coil down, that could be a top for the dollar. So keep extending your lines one way or the other. They might give you information where markets could be a buy or a turn point. Eric Moade, good luck, peace, and blessings. I am out for now, but I shall be back. Woo!